Well, company portfolios have really evolved over the last few years already in a way that I think gives a signal as to where they're heading. It's really driven by the lower cost environment where companies have divested where they can and acquired where they can to focus on a few areas where they feel they have strength and that they can compete. It's largely driven by cost. If you can focus your portfolio on areas that you're good at and where you can perform, then that's a sustainable position to take you forward. And the most obvious examples of this are North America, tight oil and shale, where there's a lot of, the US companies in general have started to retrench and to focus on that particular segment. I think that segment's well understood. And in some ways that has a high degree of specialism within it. Companies not only focusing on unconventionals, but really starting to focus down on specific plays where they can outperform. Our view is that that's a good thing to do in the short term for performance. It does raise questions about the viability of those companies in the very long term. In other words, where are they going to go next? But I think specialism and focus is much wider than that. If we look around the world, there are other examples. I think the Canadian oil sands is one where you also have a focused players now concentrating on that. But in other areas as well, the North Sea, for example, has a number of new entrants, often private equity backed, but they acquired assets with a view to really driving down costs and to sort of performing within their own specific areas. And I think beyond that, the world is full of opportunities for specialization and focus, for example, around mature fields or mature areas where you can build on existing infrastructure, the so-called whole basin strategies, as we call it, where you utilize everything you've got and go for every additional sort of resource. So I think going forward, what we're going to see is that upstream companies more and more are going to be organizing their portfolios in areas of focus. It doesn't mean one area, it can be several areas, but there's been much less scanning the world and seeing where to go in general. I think it'll be focused, companies will be focusing on the areas that they really feel they can outperform. I think that's the trend going forward. Well, it's a paradox, isn't it? That on the one hand you have focus in portfolios, and on the other hand the major players are looking increasingly at, in a way, diversifying into renewables and let's say clean energy solutions at the same time. I think the reality is that both need to happen together for the major companies. The major companies need to focus for the reasons that I just talked about. At the same time, I think stakeholder influence will push them a bit to continue to explore how they can do more to help the energy transition and to lower their carbon footprint. Some of what they can do is around their operations and reducing methane emissions, improving efficiency, maybe diversifying their portfolio a bit from oil to gas. But what we do see is that particularly the European players are investing relatively modest amounts of their capital into technologies around renewables and sometimes end user solutions as well. Around, for example, battery technologies and with a view to how electric vehicles might be expanded. And I think that interest will continue. It is a big question to what extent the big players would jump into that business on a large scale. I think the jury is still out on that. It's going to be a very interesting area to watch. But I think that reality is, with large companies, you'll have a combination of focus and a bit of diversification for some time to come.